I'm Corbett Wall with DB Auction, here with your feeder flash for Thursday, February the 11th, brought to you in part by Norbrook. Norbrook strives to provide greater value in the generic products it provides veterinarians and producers, including making enhancements in formulation, packaging, and economical cost over Pioneer products. For more information, visit norbrook.com. An imperfect process, and I'm talking about the delivery process that we talked about at length on our last visit, where your futures contract matures and in those commodities that you can deliver, like live cattle or grain, then if you're on the sell side, then you can sell those cattle at that price. Well, we came into this week early in the week with our February live cattle contract about 117.5. Guys were looking at probably getting 114. They wanted more than that. That's the basis, the difference between the cash and the futures price, especially whenever it's at a maturity there. So we saw on the first day that you could tender cattle for delivery, we saw about 9 deliveries tendered. Then the second day, we saw 66 deliveries tendered. That was on Tuesday, 66 of them. And the lion's share of them, 60 of them, were in the Southern Plains in Texas and the Oklahoma Panhandle there. So, so this delivery process happens. Now, why would people deliver cattle? Now, we're gonna talk about that. How does that happen? Why would you deliver cattle? And it usually costs, most of the guys that deliver them and have done it, a lot of them have told me that it takes about $1.50 to $2.100 to cost to deliver them. So, we were talking about close to $117.50. And so that would be back down to $115.50 at $2, and we were looking at $114 on your market. They were hoping to get $115 or better, and so guys went ahead and decided to deliver them, and it was worth it. But there's several different reasons that you might deliver. One is a marketing option for some producers, especially those smaller producers that have a hard time getting the top of the market. Maybe they're sitting in an area that doesn't always get the top of the market, and that's a good way to handle the delivery there when you've got a producer there that has a pen of fat cattle or has a contract of fat cattle, and he's got the goods, he's got the real asset, and he's got them hedged or sold on the board there, and he wants to use that as a marketing tool to market his cattle and get paid for them. That works pretty good. They started doing that several years ago quite a bit, especially up in South Dakota there and the edge of Minnesota, and because they were always kind of behind the market, $1 or $2, and they just struggled to always get the full market that the rest of the areas were getting. The 5-area feeding region was getting. They would just seem like they were getting treated like stepchildren up there. Well, so they started using that Worthing, South Dakota, the Sioux Falls Regional Livestock facility to deliver those cattle, and it was working real well for them. Well, so well that CME decided that they were going to have to take a discount if they were going to deliver at that facility. So that pretty much washed them out. So you don't see the big deliveries at Worthing anymore, and that's kind of the way it happens. Every time somebody finds a reason to start using it, then they change the rules where they won't so much. But another reason they might deliver, it's a power play with risk managers that are working for some of your bigger independent feeders, taking delivery, which you used to see McBain Trading do that all the time. Back whenever I was grading delivery cattle, it was usually McBain Trading that was taking them. They were trying to fix the basis, basically to help all their customers that they were handling the risk management for. And so that was a way to kind of keep things true and keep the cash and the board pretty close together. So that's another reason that you might use delivery. What's another reason you might use delivery? Well, it would be when corporate feeders, which may or may not have held those contracts for a long time because they've got the lion's share of their cattle already promised through some type of a formulated agreement with a major packer. But your packer partners, your big corporate feeders, they may use that to help their packer buddies. You know, you could deliver 60 loads of cattle to kill the board, because that's going to scare off your long positions there, the longest ones, because they're afraid they're going to get delivered upon. You could deliver about 60 loads of cattle to kill the board and allow your packers to purchase 60,000 head of cattle or more, at least $1 cheaper than what the market was going to dictate for that week. Well, in this instance, that looks what the reason was for delivery there. Because we find out it's big corporate feeders that are already in a formulated contract with the big packers. They're the ones that deliver. Of course, the board's down on Wednesday, and it scares everybody off. And then of course, you didn't get the 115 that we were hoping for on our market, and everybody trades at 114. Worked pretty good for them. So what happens with those deliveries? Well, all 66 of them were re-tendered, meaning whoever got dumped on, whoever got those cattle delivered to them, they paid $100 penalties, and then they send it. They then re-tender those cattle and see who gets them the next time. But we had 54 new ones delivered on Wednesday, or tendered for delivery. So we'll see what happens with those. And as long as there's a pretty good basis, it's about $2.25 now. So that'll continue to do that, but I would say the board will probably work lower again, as the threat of delivery will scare off our long positions, even though we're just barely in the contract month, and then it'll tighten that basis up with what our steady cash market is. But that may be over some of y'all's heads. It may be dumbed down too much for some of you guys, but I'm just kind of trying to show you what I see in that delivery process. Let's talk about the board on Wednesday. February live cattle futures down $1.32 after it was up so much earlier in the week, but settling on the day on Wednesday at 116.25. April live cattle down $1.12 at 122.70. You go on out from there, down 52 cents to down 107. Now, it didn't affect the feeder cattle at all. March feeder cattle up 85 cents at 139.50. It's getting up there pretty close to $1.40 there, and we don't see cattle selling at that, mostly because of the weather and things that are going on this week. I would say if things would kind of straighten up, we'd see your cash feeders get up there closer to what your spot market is. But it's still the March, and we're on the upswing, so it doesn't have to get too close right away. April feeder cattle ended up 32 cents at 143.50. Going out from there on your feeder cattle, they were up 10 cents to up 42. And why did we continue to see strength in feeder cattle? Because grains dumped. And I tell you what, the volatility in these grains, and there's a lot of grain merchandisers that sit and stare at those grain futures all the time, and normally they're boring. You know, they move a penny or 2 pennies or 1.5 or 1 3/4 cents a bushel here or there. But I tell you what, the last 6 weeks, it's just been ripsaw, one way, back, forth, up and down, back and forth. And if you kind of know what you're doing, opportunity to make a lot of quick money there, but more than likely, a big opportunity to get your head taken off. So let's look at March corn on Wednesday, down 21 3/4 cents, just a day after that USDA report, and that report did not have a lot of big surprises in it. But it's gone now, so you don't have that to look forward to. But down 21 3/4 cents, wow, all the way back to $5.34.5. We were just talking about it back to break $6 a bushel. Now it's all the way back to $5.34.5. Your beans for March down 47 3/4 cents, and it was over $14 a bushel. Now it's back to $13.54. But I tell you what, I feel sorry for those guys that are watching that and trying to do right by merchandising grain and watching those grain futures just back and forth. I mean, it would be exhausting to watch. What about your fat cattle trade? Well, I pretty much told you guys what happened when I was talking about the delivery process, but we come in, especially in the southern plains, because they're shorter on market-ready supplies than the north. We've seen a lot of cattle being trucked from the northern feedlot areas down into southern plains slaughter facilities. But especially in the southern plains, they were asking 116, figuring on getting 115. Our Texas and Kansas cash pools, although there wasn't a lot of cattle in them, they got 114.20 on Tuesday morning before all this uprising happened. So that was higher than what our market was last week, heading towards 115, and everybody just assumed we'd get 115, especially after the board was up so much. Well, that didn't happen, mostly because of the deliveries that killed the board. Board opened down pretty good on Wednesday morning, and then guys just wanted to stick to that steady, so that's pretty much what happened. But in the northern plains, it's still going to be a tick stronger because they weren't quite getting the full 114 or the full 180 dressed on most of the cattle. So it'll be a tick stronger in the northern plains, but just absolutely steady in the southern plains. Iowa had confirmed sales of 2,800 head, ranging from a 111 to 114, but dress sales were all at 180. They had a spread there from 178 to 180 last week. Nebraska, 1,400 head confirmed, all at 114 live and 180 dressed. Kansas, 2,400 head confirmed, but a lot more sold after those reports were tabulated. So I would say our trade's pretty much done, aside from some cleanup sales that might happen on Thursday and Friday, and I would say they'll probably be steady too. But confirmed sales of 2,400, no telling how many thousands they sold. In Kansas, all at 114. And Texas had just 300 head confirmed at 114, but I did see that cattle trades tweet from Consolidated Beef Producers, and they sold their show list at 114 in the southern plains. So that's your market, guys. Box beef cutout values just kind of split, and they've been that way every day this week so far. But choice was down 127 at 233.02. Select up 23 cents at 220.96, and just as we were starting to see that choice select spread widen in the last couple of days, it's come back together a little bit. But as we see the higher cost of gains, and it's going to cost guys more, and to feed those cattle to those obese weights and heavy weights that bring about more choice carcasses, we're going to see that choice select spread get wider because there's not going to be as much choice product on the market. Slaughter, 345,000 through Wednesday. That's down 9,000 from last week, down 18,000 from the same week a year ago. And we still got, plants being dark, for maintenance and things like that. And those were scheduled, but weren't able to quite keep things up to par by adding more slaughter at other facilities. But it's going to be down a little bit, but we're expecting it to come back and come back pretty strong next week. What else is going on? I told you guys I am going to make it out this weekend or on Friday to the last sale of Shasta Livestock there in Cottonwood, California. My good friend there, Ellington Peak, is having his last sale. Just kind of wanted to be there, and I tell you what, they're going to have a whiz bang. I talked to them out there. They got a good run of cows and bulls on Friday morning, and then going to have 2,500 head plus for their last sale. Now, my dad and I owned a small sale barn there in eastern New Mexico, and I remember our last sale, it wasn't a big whiz bang like that. I think we had 83 head or something like that, hence the reason that we closed it. but you just rarely see a sale barn that's still ginning like that having their last sale. But and I didn't have to go out there. I'm not getting paid to go out there. I'm just going out there on my own because I respect the people out there, and I want to be there, and it's relationships that's got me where I am in life, and I want to go out there and make some new ones and make the ones that I have out there stronger. So that's why I'm going. And I just figured whenever I was contemplating on whether I could squeeze it in my schedule or not to be able to go out there, somewhere there were some cowboys that were saying, I sure wish I'd have went on Charles Goodnight's last cattle drive. Should have went on that one. Well, I'm going out there for Charles Goodnight's last cattle sale. and I just kind of want to be there, and it's important to me, so I'll be there. What else is coming up here early next week? February the 16th on Tuesday. Two of our production sales that are pretty near and dear to my heart. My buddy Jim Felton at Felton Angus Ranch, Springdale, Montana, is selling his big, rugged, rangy bulls there. And that's going to be on Tuesday, February the 16th. It was rescheduled because of the big blizzard that come through. But also, I will be at the Reverse Rockin' R Ranch there, just outside of Raton, New Mexico, Maxwell, New Mexico, or close to Springer, New Mexico. That's my old stomping grounds. But that's Chris Earle's deal there. And, he's a good customer. He's a sale manager, him and Wes Teeman there, and they do a good job for us, and we get a lot of sales through them. And they really got the genetics going down there in a rough, ugly, dry part of New Mexico. But you guys want to tune in to that Reverse Rockin' R Ranch sale there, and that's going to be on February the 16th also. Also coming up next week out there at Nevada Livestock Marketing, I talked to Jack Payne. He's got a whale of a sale again. These monthly specials he's been having. Going to have another 5,000 head, maybe 5,000 plus. A lot of those little hard, light, weaned, dried out stocker calves that you guys want. I know you guys want. You want to, kind of get them going on wheat, and then pull them off that wheat and go to grass with them. And I guarantee you, you will not have much problem with them at all. We've been sending cattle from there out to Kansas and Oklahoma. Guys are loving them, not having much trouble with them at all. And I tell you what, it's that low humidity and that high desert country there. And those cattle, they haven't had every single thing that they wanted their whole life. So they're pretty rugged already, and they're just ready to go to work for you. Let's talk about your feeder cattle market. Real-time index on DV auction late on Wednesday, sitting at 135.76, absolutely unchanged from the end of the previous day. Why? Well, so many sales were canceled, so we didn't have a lot of wiggle room to change things. There was many auctions that were canceled due to the bitter cold, bad road conditions, or snow and things like that. So we didn't have a lot of new sales coming in there, even though we had several big sales. They had lighter receipts, so I just didn't see enough to change that real-time index. Sitting on with about 25,000 head in the pool there, and sticking really close to what your CME cash feeder cattle index is, just 11 cents per hundredweight difference there. So if you think that's not a really good indicator of what your index levels are, you need to be watching that, guys. Let's talk about your big sales on Wednesday. OKC West, El Reno, Oklahoma, 3,500 head there for an extremely light weather run for them. They called the market on feeders steady to $2 lower and calves $3 to $4 lower, but they did have some very impressive sales there, including 120 head, 866 pound feeder steers, bring 135.60. That's a pretty good swing on a big, long stretch of cattle right there, and then got some weight to them. How about winter livestock? Dodge City, Kansas, 1,100 head there, another weather deal for them, but steady to 3 higher where it was tested, but lighter run there is kind of hard to make comparisons with. How about a quote from Winter Livestock in Dodge? 66 head, 855 pound steers, bring $140. So, both those quotes I give you are well over what your index levels are, although we had just enough below there to keep those index levels completely unchanged. How about Torrington Livestock Markets in Torrington, Wyoming, 3,800 head there. And I just tell you, you guys up in the northern plains there, just thicker blooded and tougher than what we are down here, and they still just keep doing business. But feeder calves in Torrington, I'm not talking about yearlings. They really don't have many yearlings in that country, but bigger calves that's got to go right on to feed, steady to $2 lower. Stalker type steers and heifers, steady to $3 higher. I tell you what had big sales was out in Twin Falls, Idaho, Lewiston, Idaho, places like that. But of course, those don't go in your index because they're not in your 12-state region there. But they had some big sales out there and got along really well. Of course, you got to figure the freight to come back to a commercial feed yard area, and that's just the only difference in how they sold, but really good sales up there. But how about some individual quotes? Some Torrington on some fancy steer calves, 104 head, 517-pound steer calves, bring 186 and a quarter. And then a quote out of OKC West and El Reno. I tell you guys, you can't find Red Angus replacement quality heifers anymore. And then when you find them, I tell you what, everybody knows they're there. Well, the Jacobs brothers out of Frederick, Oklahoma brought in a big long string of cattle, and they had some real fancy heifers with some weight to them, good enough for replacements, and Red Angus. And I tell you what, the cream rises to the top, guys. They sold 65 head of them. Red Angus replacement quality heifers, 869 pounds, 129 and a quarter. That's steer price. How about the best quote that I saw anywhere, and your Zach Tran top quote for the day? Winter Livestock, Dodge City, Kansas, 50 head, 936-pound steers, bring 136.85. And that's your feeder flash for Thursday.